the S&P 500 every day, but you don't get to witness Bitcoin all-time highs every day, I'd say. Come on, mate. Just gotta keep an eye on the S&P. We have the news coming in 2 minutes. Also on the Nasdaq here. But I don't see the setup yet. What would be nice would be some kind of a market structure shift with a bullish fair value gap. And I'm also interested to see if this candle is closing inside the hourly fair value gap. Or if not, yeah, of course. Yeah, that's mainly due to demand being incredibly high, insanely high, compared to the current supply. I mean, even on Kraken, yeah, I don't know, you maybe know the crypto exchange. Yesterday, for example, you weren't able to buy Bitcoin because the asset is sold out. There's only a set amount of new Bitcoins miners can produce per day. And, well, ETFs buy up more than that. So, yeah. And then for retail to still be able to buy an entire Bitcoin, or even just, yeah, getting into Bitcoin at all, it's... I think we talked about that yesterday. If we go to the tapering chat. This was this morning. Yeah, right here, Bitcoin. The asset you are trying to buy is sold out. And that's a first time. And I would say that's due to the ETF mania. Yeah, just forget about it. Until your grandma or your mom tells you about Bitcoin, that's usually a good indication. That's what I used last time, actually. They started talking about Bitcoin in the local small town newspaper, and I was in Australia at that time, and I'm like, all right. It reached mainstream media, and that's when I decided to start slowly DCAing out the same way I got into crypto last cycle and this cycle. All right, the news candle is in. We closed below the hourly. Right here, we open up with an hourly bullish volume imbalance, retested the 50% already. The only thing we could be looking at, I don't want to miss it, be this hourly bearish fair value gap that we just created. Come on, push it. Against the Australian dollar and euro, and I also think against the British pound. Bitcoin already made a new all-time high, but not against the US dollar yet. So still waiting on that. We just tapped the hourly bearish fair value gap right here. Do you guys see that? We tapped it. Come on. Sorry guys, that's ETH at 3.8. Man. Most important thing is to not jump in now. And don't be one of those people that get liquidated. 5-minute time frame. Just retest the VWAP. We have our hourly bearish fair value gap here. Turn off the hourly real quick. Wait for the news candle to close in and then see what we can work with. Also an interesting side. Come on. What's it called? we go to coin class and liquidation, we tapped it, and that's the new all-time high. Let's go. And what I wanted to bring up here quickly is just to show you guys how big the liquidations are, how many people actually tried shorting Bitcoin. 6.73 million in the last 1 hour. 32 million US dollars have been liquidated. 14 million of those were longs, 18 million of those were short. And if you look at the most recent 24 hours, well, that's whopping 552 million being wrecked and liquidated. Don't be one of those. One and a half minutes to go on the S&P 500. That's about it with Bitcoin. That's all I have to say for now. Nice to see. Set for close. Now let's bring back the focus. Of course it's not welcome for many. But it's been that way last cycle and all the other cycles as well. Even if everyone was presented with the opportunity to buy 1 Bitcoin or even just 0.1, well, at the right time, now in hindsight, it always looks easy. We all know that, and we go to the 1 minute time frame and like, oh yeah, perfect inversion fair value gap setup. Damn, that would have been nice, blah blah blah. But you don't deserve it. It's as simple as that. If you don't buy during the bear market and you look at it from hindsight in the bull market, well, what can I say? Everyone that decided to take the risk got rewarded. Everyone who decided to not take the risk and like, oh damn, I missed it, well, that's no one's fault other than yours. And then what happens most of the time is people trying to compensate with that, especially if they had it on the radar. The probability of that is pretty high, and then they try to make up for, well, the food they left standing on the table by not buying Bitcoin during the bear market, using 150x leverage to make up for that, which, usually doesn't go very well. Maybe it works nice 1 or 2 times, but then, you don't stop, and eventually, market's gonna get you. I mean, you could say the same thing about Nvidia. Oh yeah, the Nvidia massive pump to the upside from, I don't know, $100 to over $700 is not welcomed from many because they missed the bus. That's not an argument in my opinion. I also want to point this out. Volume imbalance, unfilled. Come on. What's going on? Volume imbalance. You can see that we have a unfilled volume imbalance right here. We gapped up on that news candle and haven't completely filled it back in. If you remember, I was kind of looking for an opportunity to, well, initially trap traders long on the news candle and then potentially get short. This would be this kind of opportunity I'm looking for, but I would prefer a bullish fair value gap that I could use as inversion eventually. We will see. people missed the bus, and it was kind of unexpected. Ugh. Tough statement to make. Because it always has, always will be like that. If you miss the tech bubble, well, you missed it. Of course, people are going to complain if they miss something. But that wouldn't mean it's going to dump. That just generates more interest or FOMO into a specific asset. And I think if I read it correctly on Twitter today, Bitcoin actually flipped Microsoft in terms of market cap and is soon about to flip Silver, if I'm not completely off with that. Okay, so we filled in the volume imbalance already. We're not going to leave behind a 5-minute fair value gap right here. Well, this could have been a gut feeling short. Lining up with the hourly bearish fair value gap here, and then also seeing this unfilled volume imbalance. They always do get filled in. But yeah, that's, I'd say, better to wait. We have an entire hour in front of us to look for Bitcoin already flipped Silver in market cap. Yeah, and that's a big move. Come on. No, I don't think I'm gonna be able to catch it. I was just about to enter short. Well, we will see. $2.73. I think that should be 50%. Yeah, just around that. Target mainly, the first target essentially is going to be this new week opening gap, and then we have plenty of sell side liquidity here to snag. We'll see if we really go back up into this, then so be it. That's why I only risk 0.5%. I don't have the fair value gap yet to actually risk 1%. All my 1% risk trades always evolve around a specific fair value gap. Let's see, NQ. I actually cannot trade the, well, I think I'm gonna miss out on that. Oh well. Let's just pull up the ON chart, see what we can do here. To participate in the leap. SPX. Oh, and here. Come on. No, it doesn't want to load up. Well, then screw it. Gonna take the paper trade another time for that leap competition. If you sign up for that and you stay profitable throughout the entire month of March, you get a free month of TradingView membership, which is not a bad offer. I won't compete in the leap competition. I think we have someone on the leaderboard on the Discord. Let's see, Kita, should be you if I remember it correctly. Keep it up. Not anymore. No, fair enough. I think there are more important leaderboards to be on. Of course, it's a nice to have, but well, I don't know. I'm already executing on MT5, looking at the futures chart, and then if I also have the ON chart open and execute there, and well, I'm already at a disadvantage to traders who fully focus on the leap trading competition. So, well, that's not my full focus. My full focus are my funded accounts because they get me paid. So yeah, kind of a conflict of interest. Yeah, definitely. Add another 0.5% there. Essentially got exactly what I wanted. I said that I'm curious to see how this candle is going to close. We closed below the bullish fair value gap right here of this entire lowest bullish fair value gap of this entire move to the upside. We essentially retested it with the news candle, filling in hourly bearish fair value gap, retesting up closing hourly candles. And yeah, well, if you recall, I said that I'm not just gonna go short. I would prefer some sort of a fake out move to trap traders long, right on the news candle, followed by a nice inversion fair value gap setup. The inversion fair value gap didn't happen, unfortunately, because we immediately rejected off the VWAP and formed a bearish engulfing candle. Now we actually have a nice bearish 5-minute fair value gap. Now we would be able to set a nice sell limit. Let's see if we actually end up moving today, or if we're just going to consolidate around these areas. Point out the volume imbalance. Prefer that to remain open. And down here we have a nice equal low target. On the futures chart, I would be referencing these relative equal lows. First short-term low, and then that next short-term low in terms of a swing low, lower high, lower higher low, higher high. Be right here. Check Discord here quickly. We hit the all-time high and immediately turned back in. Well, nice that we witnessed that here together on the stream. Not sure how many of you guys are into crypto. I know of a couple ones, but not too many. Oh, okay, nice. I didn't see that. We continued lower already, so that first entry is already paying off nicely. And that's all I'm trying to do most of the time. So I'm looking for these easy moves where I can sit here without having to stress. I placed my one-to-one risk-to-reward stop-loss right here. I was essentially banking on a fair value gap being left behind here, and even then, so my stop-loss right up here, my entry somewhere around here, my target somewhere around here. Even if we retrace and close above the bearish fair value gap, it only means I'm losing around 30, maybe 40 or 50% of my initial risk, but I rarely lose 100% of what I initially risked. That's the main point for me. So I don't have to be afraid of taking a trade there, because I know, okay, well, worst case that could happen, we could pump immediately back up, which is rather unlikely in terms of probabilities. I would lose my 0.5%, but most likely we will leave behind some sort of a PD array, and if we close above that, my trade idea, for now at least, would be invalidated, and I'm getting out of the trade with 70, 60, 50% less than I initially anticipated, which, yeah, even though with those trades I'm mainly going for a one-to-one, saves me, or that's what's actually making me more profitable. Exactly. And the cool part about it is that I don't have to worry about live trailing drawdown or end of day trailing drawdown. I have 5% total max drawdown. Now, trailing, is it trailing? Yeah, end of day 5% drawdown and total 10% drawdown on my 5%ers account here, which is more than fine. It's better than having 5% overall drawdown and a daily drawdown limit of, I don't know, 2% or something. Especially with Apex, where you have that live trailing drawdown, where it keeps track of your real-time PL to decide all that stuff. Just gives me more freedom and peace of mind. That's the main reason why I decided to, well, for the beginning of the year, first half of the year, really focus on acquiring as much CFD funding as I possibly can. I already have the futures funding in the bag. So all I'm looking for essentially is to diversify. I started CFD trading again in December because kind of got sick of the Apex trading drawdown and wanted to try it out and see how much the spread and slippage is really affecting me, and it turned out to not affect me at all. And on the other side, I also even have more room to breathe now. I don't have my live trading drawdown, I don't have my 5% overall loss, I have a 10% overall loss now. And what else? I get my challenge fee refunded, can request weekly payouts, and it's much easier to keep the funded account once you actually fund it with a CFD funding firm. So basically only upsides, if you ask me. And Funding Pips also recently, if we go over to their Discord, announced that US traders can purchase new challenges again. So yeah, you can still trade with CFD funding firms, at least with Funding Pips, legally. There we go. Come on, mate. Simple and easy, no pain, only gain. That's how we like it. Got in on upticks, that's what's really important if you trade with CFDs. If you try to get in on a candle that's already moving to the downside, spread and slippage is going to affect you a little bit more. But if you try to go short when price is going against your idea, I'd say on upticks, essentially, that's a better move if you ask me. Quick 0.5% added to the account balance. And not emotionally drained by this trade at all. Still super calm and super chill. Yeah, I don't know. Easy continuation setup. Not much really to do with ICT concepts, if we're being honest. We just used a general understanding of the market. We looked at the hourly fair value gaps. I guess we could, give it that. Saw the close below, the retest at the 10 a.m. news candle, retested the VWAP, hourly bearish fair value gap, volume imbalance right here, and the two up closing hourly candles right here. So we retested that, had a bullish engulfing afterwards. It was enough for me to get in somewhere on that retest. To look for the continuation lower into sell side targets. Usually, sometimes after, some trades that I take, I really feel super exhausted, as if I went to the gym and I don't know, benched 500 kilos or something. Not that I'm benching 500 kilos, but you understand what I mean. Just super exhausted, almost tired, and annoyed sometimes even. Doesn't necessarily mean those are losing trades. It can just be a trade that takes a very long time to play out. Like for example, the S&P 500 trade we took yesterday. Where was it? We got long on the VIP live stream right here. Once we closed above this bearish fair value gap right here. So I got in roughly around here on this volume imbalance with my stop loss at the low and my profit target at the previous week's high. And those are very similar. It's not much above a 1-to-1 risk to reward. It's a 1.3. Usually I get out at the 1.1, not looking for that 2-to-1 most of the times. those are just these very, very, very easy, calm trades to take. Give it some room to breathe. Get out early if what you anticipate gets invalidated, or take off some risk. Take off 25-50%, whatever feels right to you at the moment in time. And then, yeah, usually giving those trades a little bit more room to breathe and not looking for your 5-to-1 risk to reward can really do big things on your mentality, your mindset, and also your win rate. With the normal 1-to-1 risk to reward strategy, you should average at least 60% to stay profitable, 50% to be break even essentially. But the cool thing about actively managing your risk, saying we get in right here and our stop loss is right here, we don't set this trade and leave the charts to do what they want to do. We actively monitor it. So if anything happens below here and we would have a nice close back below our entry inversion fair value gap, well, I would use this as confirmation that, well, the long might not be in play anymore. And we might continue lower, and then chances are higher that my stop loss is going to get hit. So I already remove 50% of my entire risk right there. Once I see that invalidation of my entry fair value gap. It's pretty simple. And by doing that, if you lose from the next 100 trades, let's say you lose 40 of them, 40 times, or let's say 30 times, because 10 times you're going to get completely stopped out, you save at least 50 or 40% of your entire planned risk on that trade. And over 30 trades, that 30% is going to account for something which can be added to your winning trades, because if you lose less, you win more, if that makes sense. So I fine-tuned my simple 1-to-1 risk to reward setups. Let's see if we keep on dropping. NQ seems like it. Back below the new week opening gap here, we still have roughly 950. Yeah, 100 points to drop to the previous week's low. If we're really gonna do that, then I would anticipate tomorrow. Let me check that. We have non-farm employment change news tomorrow at 8:15, and at 10 a.m. we have Powell testifying. Well, so certainly for me, there won't be any trades happening prior to Powell testifying. That's day 1 of his testimony. And on Thursday, it's day 2 of his testimony, also at 10 a.m. New York local time. Interesting. Friday is NFP. We'll see how that goes, if I'm even here on Friday. Average hourly earnings. So tomorrow's going to be interesting. Might even skip London, but we'll see. Are there any questions? I cannot believe that there are no questions. We have a couple of free viewers. Francie, Anas, ICT. Sorry, don't really know how to pronounce your name. Atina. And Cat VDK. Feel free to ask anything. Don't be shy. We keep on heading lower without a bearish fair value gap retest whatsoever. I'm already happy. Just wanted to add that closing trades early with invalidations of my analysis completely changed my trading. Well, welcome to the club. Welcome to the club. Especially if you, yeah, I don't know, you have your good draws on liquidity and just give those trades a little bit more room to breathe, and therefore also increase your win rate, because the chances of your bigger than usual stop loss getting hit, and then topping that off with exiting trades early if they're being invalidated. And by exiting early, it's more like the idea is not doesn't have to. Now let me rephrase it. If you exit early, this doesn't mean that you can't enter, that you cannot enter the same trade again in case you were wrong and price just tricked you. I'm quick to enter, and I'm even quicker to exit a position. Can be really quick changing my short-term bias. I'm not glued to my overall daily time frame bias. I don't think that's beneficial for lower time frame traders. Like for example, yesterday, I can show that quickly here on NQ. I got home from Jiu-Jitsu class and I saw the NQ chart, saw the SMT divergence and all that stuff, but at this point in time, seeing that we come from the low of the day, I really thought that NQ can potentially challenge ES, and let me get rid of these lines, and continue higher of this bullish fair value gap. So essentially I got filled. I had my stop loss at the short-term low, and I look for the continuation back above the high of the day. Very simple, above this buy side liquidity. Then I saw, okay, price holds support on the new week opening gap. Nice, we closed back above it, but we failed to continue higher. Right here, we even had some more SMT divergence because ES actually formed a higher high here, but ES did that somewhere above the all-time high. And then also noting the time, it's 3 p.m. We're inside of the power hour. We keep going up. It's 10:15. We fail to really continue higher. 10:25. I'm still doubtful, and it's getting around that 30-minute mark. Like, should I exit? Yeah, I already don't like it. We have 3:30 coming up. Very likely, well, this could end up being a pump and dump based on also what we saw on ES with the SMT divergence. So I closed 50% right here, and already hedging my long with a short. That's what I did right there. So I entered a short on this retracement, anticipating the 30-minute candle right here. Or yeah, essentially this new 3 p.m. candle being a fake pump, a tiny pump here to the upside, followed by the reversal. And my long, I closed that long right here on this candle close. My initial stop loss was right here, so I saved myself around 10 to maybe 15% of that long position that I took from right here. That failed. Closed 50% of that already right here, and started hedging my long position on those upticks right there. And then essentially, after I saw that this fair value gap has been inverted, the lowest bullish fair value gap of this entire move to the upside here, plus seeing a bearish fair value gap right here paired with the VWAP, well, led me to believe that this low is going to be next, at least here on NQ. Got in on this bearish fair value gap, added some size, still having my hedging position running, close to shorts in some drawdown. If we just look at those few trades that I took once I came back from the Jiu-Jitsu class. But this way, yeah, it's just a dynamic giving and taking. I don't know if that makes sense saying it like that, of me managing my risk. Quick to enter, even quicker to exit. Not afraid of being wrong. Usually if I'm wrong, that just means I would be right, or I could be right about the opposite direction, and 80% of the time, if I'm wrong about the first direction, I'm likely right about exactly the opposite. And that's what I take advantage of from, that's very important, from studying my journal. If you don't journal, you wouldn't know. Nice. Very nice to hear, RM. Yeah, it's that last stage before you really achieve profitability, being a break-even trader. During that stage, you really learn how to manage your risk well and what to avoid to not be a losing trader. You essentially start out being a losing trader. Then you progress to being a break-even trader, where you learn lots about risk management, because essentially that's what's pulling you out of the losing trader stage. Learning more things about how to control yourself in a difficult decision. And after, I don't know, for some people it takes a couple of months. For some people it takes multiple years to pull themselves to have learned enough to eventually to wait for this moment where it just clicks, and then they move over to the profitable stage. And just because you're in that profitable stage doesn't mean that all the issues or troubles or hurdles from phase 1 and phase 2 don't come back. It's a daily battle, essentially, for survival, for staying afloat and being profitable. Looking at the tapering chat, I saw that you managed to long and short the same fair value gap during London. How did, like you just closed at the moment it failed to respect and then you proceeded to the short? No. Actually, on the Funding Pips Match Trader app, there's a really cool feature where you can simply click invert the position, and that's what I click, and then it just flips my lots that I've been long with into shorts. Or I just close and very quickly jump in short again. But it's much easier to quickly tap that switch button and switching from longs to shorts. I don't know. I don't think many people use that feature the right way. Hola, H. Smith. No worries. Next time, feel free to interact or ask questions. We now just left behind a tiny little bearish fair value gap, overlapping with the new week opening gap, an old new week opening gap, of course. You could try getting short here. I'm not gonna get short here. I don't know. Next sell side is a little. Oh well, this would be Friday's low. Let's see, well, stop loss would be for a 1-to-1 exactly at this high. We have another fair value gap right here. I'm gonna leave that open as a paper trade. If you want to take the risk, if you haven't taken a trade yet and you feel comfortable taking that trade with a simple 1-to-1 into Friday's low, then this could be a potential setup. And once again, just because we enter here doesn't necessarily mean that we lose 0.5% our initial risk. Because, we only would lose 0.5% or our entire risk if we immediately pump into our stop loss. But more likely, we're gonna see a close somewhere above the bearish fair value gap. Let's say, for example, right here, and we would get out with 40%. With 40% saved, or maybe even 60%. So just because we risk 0.5%, that doesn't mean that's final. Let me check. That was the London session. Yes, that was mainly due to the VWAP. Right here at the London Open, we have that nice wick to the upside. We start disrespecting the highest bullish fair value gap here. Actually, the second highest bullish fair value gap. A little bit scared at this point in time, knowing that it's 330. But well, essentially just kept on holding. From my point of view, price wouldn't have invalidated these two bullish fair value gaps if it weren't going to retest the lowest bullish fair value gap right here. So from that point of view, yeah, confident enough to take that short after the VWAP retest and that initial fake out at London Open. Let's say the safer entry that I also shared afterwards was a simple continuation of this bearish fair value gap. I know we already took out sell side at that point in time, but just because we took out sell side doesn't mean we have to essentially reverse. We can still, like side, I entered short here, stop loss above this short-term high, now actually above this candle's high. The only scenario where we would lose our entire risk is if we immediately pump up. If that happens, we still have a chance to enter somewhere on a downtick for the reversal continuation higher to get back to break even or something. But as long as we leave behind bearish fair value gaps, close below bullish fair value gaps, nice volume imbalances being left behind, I'm happy to simply take the continuation from there until I'm proven wrong. And most of the times, seeing this bearish fair value gap, if we close above, we tend to close above just around here, with my stop loss being here, essentially having say 50%. Then I can still get in on a retest, look for my short-term high to be targeted, my stop loss being somewhere around here, or maybe the 50% of this wick for another quick one-to-one. I think I'm pointing to the wrong leg up. Hang on, before I'm doing that, I want to check how this worked out. 1 minute time frame, we have a couple of bearish fair value gaps. Also a bullish fair value gap. Now this could be the typical inducement of liquidity scenario what we see right here, where we get really close to our sell side liquidity target, but instead of getting there, we actually start trying to get some longs engaged, looking for the reversal after the dump before we eventually raid all that liquidity that just has been induced to make more money on a move to the downside. Let me check that out here quickly. I think you're pointing the wrong leg up. It's the second one, or okay. I thought you were still talking about the London session setup right here. That's why I referred to the London session. But you asked about, anyways, you were really confident to do that because of the perfect respect of the VWAP. Yes, just having a good, I think I already covered that, but essentially before we started the live stream, at the beginning of the live stream, we realized, okay, we have 10 AM news. So for me, that means I'm gonna wait and see on the hourly time frame if we have nice fair value gaps that could be used as some indication of what's about to happen. We saw the hourly bullish fair value gap right here being invalidated. The only thing we had left below was all these short-term lows that we identified on the 5-minute time frame and this inversion fair value gap. With the news candle, we pumped up, retested the hourly inversion and this hourly bearish fair value gap paired with the hourly up closing candles and bringing that down to the 5-minute time frame. You can also see that it nicely rejected the VWAP, but instead of blindly placing a short here, I prefer to wait and see the confirmed reaction. We've saw that reaction. Here's our hourly time frame. Bearish engulfing candle, trying to get in on an uptick. And really confident might be the wrong word for it, but the probabilities for the trade to play out seemed to outweigh the probabilities of the trade not going to work out, essentially. Confidence can change really quickly. I'd say the main reason for this trade was that bearish engulfing rejection from the VWAP. And we also looked for the potential fake out long if we were to continue lower and follow what NQ has already done. So looking for that inducement, trying to get traders long right here on that news candle from the low of the day with a fake market structure shift and all that. They might have gotten in on a potential breaker block right here whatsoever. Just after the news, waiting for the reaction, that initial fake pump to the upside, we said that we would prefer a inversion fair value gap. With that, we didn't get that. We got a massively bearish candle, bearish engulfing, and got in on the continuation. If anyone just took that trade, also played out. Did anyone take it? We labeled it as a paper trade, but it's fine. That's okay. It's 10:50 now. We hit Friday's low. So that's all cleared. We're inside the macro timing window now. I didn't either. It's okay. Can't catch them all. Don't even want to catch them all sometimes. So let's actually take a closer look at that. If I would have entered that on my spread account on that bearish value gap, my 1-to-1 stop loss would have been right here. Would that have been hit? Whoa, I think we would still be in that trade. If my stop loss was right here, I think that wouldn't have been enough to actually hit my TP with spread. And I would still be sitting in a mess. Knowing that on the futures chart we just cleared the low. And I'd say I wouldn't have been quick enough to manually close this trade. And the chances of me getting greedy and looking for more profits is also pretty high. Maybe putting my stop to break even, but many ifs and thens. But this was the better setup to take. We just retested the fair value gap again after taking the slow. Let's delete that. And Q getting closer and closer to our previous week's low. Already way below Friday's low. Rochi 47, nice. Is that an NFT you own? And if so, what's the collection? Well, he just left. I know, maybe got scared for pointing him out. Let's take a look at a few different charts. We're getting closer and closer to the end of today's stream. BTC USD, Coinbase. Well, that was quick. From 69,300, quick 4% dipper. Easiest thing essentially to place a short at the high of the all-time high and wait for some sort of a retracement. What do I think about NFT? Depends on which NFT. I think the real value behind NFTs are the communities and the team behind it. Similar to, yeah, I don't want to say real art, but yeah, your regular art, I don't know, your Picasso picture and stuff like that. It's more about the artist who painted it. And in the same way, NFTs are more about the communities. So, well, I don't have anything against NFTs. I hold a couple of them myself. It's always a nice speculation. Hang on. Especially if you're, well, into the space, essentially. One of my biggest ones. I haven't been around with NFTs during the first cycle when they became popular, but I started to look more into them and pick a few ones that I really liked, and one of them was Pudgy Penguins. Which, and they're actually a holding company now, so it's a pretty big company, and they actually sell their penguins now at Walmart, and NFT holders get a percentage of that revenue. I got them very cheap, below 0.5 ETH, and well, the all-time high was 20 ETH, so that's essentially a 40x. But that doesn't mean all, well, NFTs do that. Yeah, it's about the community behind it, and less about the art in front of you. There were many NFTs that were really popular last cycle. Just too much for me, yeah, I don't know, to even get into. But during the bear market, I had some time to look at some good projects that built during the bear market. It's always a nice indication, especially in crypto. With stocks, rather less, because, well, those are real big companies, real world companies. Not saying that crypto companies aren't real world companies. You would be shocked if you look deeper into Chainlink and some of these other crypto projects. It's less of a currency. That's what I don't like about the entire, well, space, that they're still called cryptocurrencies. With a currency, you always, well, attach that you're gonna pay your electricity bill and stuff like that with Bitcoin, Ethereum, or Chainlink. From my point of view, they're more sort of stores of values and assets, like a, well, right now, a blue chip stock, for example, that is yet about to really take off. So I view it as buying shares in the company. But, well, that's only because I spend a lot of time researching and being in that space. If you're a complete newbie and you look at, I don't know, CoinGecko or CoinMarketCap, you wouldn't know what's actually behind a cryptocurrency in that example, so, or behind an NFT. And your regular Joe also isn't really interested in that. His only, yeah, intention is to make as much money as possible with the least amount of effort he can put in. They're, yeah, less interested about the technology behind it and all that stuff, more interested about the gains. It can work, don't get me wrong, but oh, there's some inherent risk with that. Like investing into a stock without, I don't know, looking at their balance sheets and all that stuff. It's a lot of work to do your research and compare different companies and how they paid out dividends and all that stuff. In the same way as, yeah, trading ICT concepts is essentially, if you don't put in your hours, well, it doesn't really work. So yeah, about that question. They're good and bad. Nah, well, good and bad. It's more about, yeah, the community behind it if we talk about NFTs. For example, those apes, the famous apes you referred to, if you actually held one of these NFTs, by the way, I've got a nice breaker block set up here on NQ, on Bitcoin. See that? That's our pump into the all-time high. Right here. That's our breaker block. And since, well, the bull market kicked in and there's more volume in Bitcoin again, or cryptocurrencies overall, ICT concepts really started to work very well. We have one member in the community who's doing really well, just trading Bitcoin. So this is our market structure shift essentially. Right here we would have an inversion fair value gap. Basic ICT stuff. Another bearish fair value gap just above that. And we started entering bearish order flow here. After sweeping the all-time high, what did we start to leave behind? A first bearish fair value gap. What did we do inside this fair value gap? Well, continued lower from there. And from here, we started to disrespect all these bullish fair value gaps we left behind, essentially leaving us, yeah, behind with a market structure shift and a breaker block paired with that. We even had a inversion fair value gap up here. If we take a closer look, same way we would do it on the S&P 500. So if you would have been looking for shorts, simply using ICT concepts on Bitcoin, well, it's right there on the chart. Took the all-time high, started to form a bearish fair value gap. That's weird. Why would price in bullish order flow form a bearish fair value gap? What does it do from this bearish fair value gap? Well, we reject, we invalidate all the bullish fair value gaps of this entire price leg. Okay, this would be a confirmation. You get in with the first position on the retest. Potential 1.8% continuation lower for you to take partials. We even hit our next, we look at market structure, low, high, higher low, higher high, higher low, higher high, higher low, all-time high, market structure shift. We've already hit that first low. Would have been a partial. Then we have a nice breaker block setup, essentially a 2022 model. Higher time frame traders, all that stuff. Trapped, breaker block, bearish fair value gap retest. We would look for the continuation into our next sell side liquidity targets, essentially. Yes, bounced off that previous day's low and actually closed above the bearish fair value gap in Q. Well, it's post 5 AM, so already out of my timing window, but I think it might be interesting to some of you to actually see ICT concepts being applied on Bitcoin. I mean, if that's not textbook ICT, I don't really know what is. 61.8 retracement. 61.8 retracement, golden fib ratio, expansion, bullish flag pattern, final pump and dump. Right with the New York Open, that's essentially when it all started. Hashtag crypto futures. Lots of volume getting in there. So, well, we pump up. I mean, if I would be hiding what symbol we would be looking at and the prices, you wouldn't essentially know this is Bitcoin, or would you? I don't think so. If I were to post this on Twitter and without, of course, yeah, price to the right, this would be a dead giveaway. What's this chart? And I would tell you afterwards it's the Bitcoin chart. Well, I guess the majority would be rather surprised. And this actually sounds like a lot of fun, so why not do it? We had the same thing here, by the way. Market structure shift. Bearish fair value gap. Continuation lower. Maybe we do a Bitcoin live stream in the coming days. It would be fun. And just see how it goes, really. Be my main objective here, really. Create a Bybit account or something like that. See where we have the cheapest rates and do that here quickly. Yeah, 1 second, Anna's ICT. I will do that immediately after answering Omar's question. Yeah, that's the main reason why I don't trade crypto. Not because of these mega wicks. I mean, yeah, well, it's reason why I don't day trade crypto and I prefer to simply buy and hold is because of the timing aspect. I also haven't done the research about it and spent time, let's say, for example, watching what happens every time at the New York Open on the Bitcoin chart. So if we look at this, perfect pump and dump inversion fair value gap 2022 model from the all-time high. If we were to look at yesterday, 930, 930, 930. 930 we pumped up, we took sell side liquidity, inversion fair value gap without the retracement, but we also continued higher for a couple of percents of the highest bullish fair value gap. If we look at the day before that, you would just have to understand the different characteristics of a specific asset, and those are going to be very different from the characteristics that I'm familiar with on the S&P 500 on Nasdaq, and that's why I prefer to focus more on those, even though, well, you could still be looking for your setups on Bitcoin, blah, 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 but yeah, I don't know, you guys know the drill. I prefer to simply focus and execute on one chart. If anything, for Bitcoin, I would be only looking to take higher time frame swings, like the 1 hour time frame or 4 hour time frame. That would be more my style, to do it on the sidelines. But even then, I don't really feel the need to do that. Of course, it's nice, always nice to see one perfect setup playing out, but well, those things happen like right here at 7:45 p.m. New York local time. Wicks are right most of the time, unless there's a huge sudden news event. But now let's see, what's this? That's 11:30. Well, it works, but you definitely have to do your due diligence. That's for sure. 9:30, bearish fair value gap, nice continuation lower into sell side after a market structure shift. Perfectly retested the breaker block. This is kinda shocking if you ask me. Took out the high. Market structure shift, 9:30 open, bearish fair value gap, tap the breaker block, continued lower. Another, let's say we get in right here, 1.5% with a little bit of leverage added on top of that. That's pretty decent. Bearish fair value gap, displacement, continuation lower. But then you also have those days where at 9:30 essentially nothing happens. We have 9:30 to 9:30 opening, and for our entire timing window all we do really is jump until essentially the PM session, if you want to bring it back to what we know on the S&P 500. But sometimes you'd also see your textbook setups playing out. Let's look for one more example before we wrap it up with talking about Bitcoin. Well, I think the opportunities are there, but Bitcoin is too cyclistic for me. With that I mean bull markets are very different from bear markets, and Bitcoin tends to go sideways for longer periods of times compared to the S&P 500. Especially during the bear market, where if there's barely any volume, it's essentially all pumps and dumps. Right here, all these little things. No, recently since ETFs came in. Of course you can still trade that, but that's not what I prefer to trade, and I look for something more consistent, which essentially would be my beloved S&P 500 and NASDAQ. Yes, Anas ICT, I can give you more details about VIP membership. So as a VIP, you can join our daily Discord live streams. Like for example today, we start at 9:30 New York local time, and it lasts until, well, usually 5 p.m. my time, which would be 11 a.m. New York local time. So I try to concentrate during a very specific 1.5 hour timing window. Sometimes I'm also sitting here until 5:30 or 6 p.m. my time, which essentially would be 12 a.m. p.m. New York local time. Looking for setups, answering questions, covering ICT concepts, sometimes taking a few X courses over to the cryptocurrency world, looking at a few different charts, but the core about the live streams is always going to remain the S&P 500 futures chart. I recently started executing on the CFD accounts, but essentially there's not much of a difference between the two. Using ICT concepts, I'd say would make up 70% of my confluence, and then 10% common sense and 20% simple price action. And then just the overall understanding of how price moves and that stuff. And I try to explain it and share my thoughts as best as I can during those live streams. You also get access to the ICT all-in-one indicator with, I stopped counting, over 15 I guess ICT concepts combined into one powerful indicator, where you can simply, with this control panel dashboard, turn on, for example, the 8:30 open, and you quickly get that displayed on your chart without having to do all the charting work yourself. I mainly designed that indicator for myself to save some time. Higher time frame, power of 3, and whatnot. There's so much included here, and you can simply put the settings in here once, and once that all is set up, all you have to do is, I want to see today's new day opening gap. Let's check that out. Wait for the indicator to load up. Sometimes it takes a little bit longer given the extreme size of the script. And here's our new day opening gap. All done. Of course, you could also do it manually, but well, if you have a preferred preferred charting layout. It's pretty hard to keep track of all that Asia session. Draw all your boxes without it getting messy, and I personally prefer an indicator doing a part of my charting work, my boxes being drawn, my previous day high, previous day low, previous week high, and all that kind of stuff. New week opening gap, midnight open, Asia session box, and higher time frame candles just saves me a lot of time. Also being in those live streams. Yeah, and then I started sharing it with the community and improving it based on suggestions on things I should add. So ICT all in one, daily New York open live streams. We also do tape reading London sessions every day. Don't remember the last time I've missed one. Right here in tape reading, where we mainly just have a live chat looking at the S&P 500 or NASDAQ most of the times, where I share my analysis too. So right here, let's look at an example for today. Looking for longs on these fair value gaps with my stop loss. Looks bearish at the moment, got out of the long in time with the new bearish volume imbalance. I try to, well, give lifetime updates as good as I can. Sometimes I even jump on a London session live streams if I don't feel like typing it all out. Then we hang around for 2 hours during London. You get access to, well, the weekly outlooks, the indicators, the trade ideas chat. We've been on a good streak so far this year. I don't share them daily, only if I see a real good setup and we didn't see a good opportunity. For example, during the New York session live stream, that's when I usually jump in on the PM session. You can see those are all trades during the PM session or post live streams that I share right here for trade ideas. So I make sure to ping the VIP members. But, well, given the nature of the 5-minute time frame and, well, trading on a lower time frame, it's not like I could give you an heads up multiple hours in advance and tell you, okay, be prepared if I ping you. Well, I don't know, if you're around at that time and you're quick enough to execute on them, you actually can. But the main point is not about you copying my trades or doing exactly what I do. It's more about, well, staying around for a couple of months, taking some of the different techniques that I use in, and essentially combining them with the stuff that already worked out for you that you might have learned from someone else's mentorship or live streams whatsoever. Combining them to find something that makes sense to you that you can easily apply. There's no, I don't know, one go strategy for me. I don't know, there are many people on Twitter that only focus on one very specific setup. If they don't see it, they don't trade it. There's nothing wrong with that. That's just not my style. I don't like restricting myself. And I also started by restricting myself, just looking at the 2022 setup. Old live stream viewers know that. Didn't really work out for me personally. It might work out for other traders, but I'm not, I don't have the same personality type or, I don't know, mindset they have. I'm a quick in, quick out, or even quicker out short-term scalper looking for easy trades using ICT concepts, common sense, and all the stuff that I've learned on my journey combined into what I'm doing right now. And that's about it. Mentorship, some videos I upload where, okay, that's only one. Started lacking on that. And then, access to the Learn ICT Concepts video series right here. But I mean, all that information can be found on YouTube for free. It's just compiled and shared from my point of view, how I use it. That's essentially the VIP membership wrapped up. Did I forget anything? I forgot the awesome community. So if you have any other questions, feel free to ask. Well, so since we hit that previous day's low target of the bearish fair value gap right here, price really hasn't been a pleasure. we started to kind of bottom out here. But, well, of course, we could continue lower, we could continue higher, we just could continue to go sideways after our initial AM session drop. Given the higher time frame and the hourly candle right here, I would still, if you're looking for longs, I wouldn't be looking for the reversal back into the all-time high. You could be looking for a scalp that makes sense, maybe somewhere around this area, this old sell side and inversion fair value gap, maybe here, to look for at least a partial, move your stop to break even if you want to hold for a bigger reversal. But, well, understanding that the trend is your friend and the trend is bearish right now, that if you go long, setting smaller targets like a 1-to-1 or 2-to-1, depending on your stop loss size, would make more sense than looking for a 10-to-1. And if you find a good short opportunity, it could be worthwhile holding onto that for a little longer, just, yeah, based on what we see on the higher time frame. So a retracement, yeah, could be fine. Essentially looking at the 15-minute time frame now and see what we got right here. It's a certainty that we're gonna fill that in. And I think we're gonna do that before we continue lower. So this would be a nice target if you now drop down to your 1-minute time frame and you see a nice setup targeting this. I don't know how, don't really care how, to be really honest, because I'm done for the day. This could be a target, and then you have a 15-minute fair value gap. By then you already moved your stop to break even, you secured some profits, and you see how it goes. Maybe secure some more partials and, you know, keep trailing it. But eventually, well, a VWAP retest is always a good final exit point, like I did this morning with the NQ long right here of this inversion fair value gap, VWAP. And then price usually likes to readjust or consolidate. In the rare cases, especially prior to the New York Open, we just keep on continuing higher. And I also made sure I share that inside the tapering chat. Well. I think where we're at. Bitcoin hit all our targets. In the meantime, it's gonna be a funny Twitter post if I can't get it right. Damn. Lost that chart, and yeah, no, it would be time